And so I was mentioning this actually earlier this morning to a few people that the precious metal space has had an awesome run. Gold has now hit its 100% measured move. Silver just hit it today. Miners are overheated. They've had a big run. They're all up into resistance areas. So while we've had a nice run and everybody's excited, a pause or pullback here for potentially a week or two is actually a very good thing. So I like silver here.
Hey guys, Andy here. Chris and I discussed the breakout in silver, gold, and oil. If you're a fan of Chris and would like to use his services, please use the affiliate link in the show notes below. Chris, how you doing?
I'm good, Andy. How are you?
Doing good. Thanks for joining me here. Some great things to talk about here, specifically in the silver space and the energy space with the crude. Let's talk about silver first. Everybody's talking about or looking at a silver breakout here, and wanted your thoughts and what are you seeing in your indicators?
Sure. Yeah. Yeah. Silver's definitely exciting. The silver, the miner space, it's finally coming to life. We've had this beautiful run up and this nice pause, bounce off this pink line, which is the 20-day moving average, which I find is a very powerful tool. And more or less, we've had this big move. And I like to always apply Fibonacci extension to get an idea of how much momentum something has. So I'm using Fibonacci extension, which is a pretty basic tool. We can get an idea of where silver should go. And the way this works is based on Fibonacci theory is you have your initial momentum move to the upside, and then you have some type of pullback. And if the pullback, the bull flag pattern, which is typically known as a halfway point, if that is correct, then we should see a run all the way to the 100% measured move that is equal to the first run. So that is exactly what we've seen literally as of you and I talking today. We hit that 100% measured move, 28.20, more or less for silver. And so I was mentioning this actually earlier this morning to a few people that the precious metal space has had an awesome run. Gold has now hit its 100% measured move. Silver just hit it today. Miners are overheated. They've had a big run. They're all up into resistance areas. So while we've had a nice run and everybody's excited, a pause or pullback here for potentially a week or two is actually a very good thing. So I like silver here. Let's jump to a longer term chart. Let's go to the monthly so we can kind of step back and look at a bigger picture here. If we were to take a look at the big picture of where silver should go next, the next decent run, we can kind of pick this low here, which happens to be the COVID low. And then we've got this high. Now, this is using Fibonacci extension again, Andy. And the way I use Fibonacci extension is different than a lot of other people. I only use the 618 extension and 100% measured move. And I find if price comes up to the 618 and it pauses for a bar or a couple of bars, we almost always go up and hit the 100% measured move. Now, what's interesting is, and this happens all the time in the markets, the 618 is generally going to actually fall in line with previous highs. And that also is one of the reasons why it usually has a bit of a pause at that level. So I think there's still a bit more upside in terms of silver. I think it could go to about 19.20, so another dollar from where it is right now, more or less. And then it might pause. And this is a monthly chart. It might pause for a month or so. We might see on the daily chart, 10, 15 days of sideways price action. And then we could get another big run up to about $36 and change for silver, which brings us right into this pivot high where price came up and found support here and then broke below it, hit resistance. So the measured moves are falling in line with really critical pivot points from back in history. Just to kind of bring it up, gold on the other side is showing that we should run to 2700.
Go ahead and pull that up if you don't mind.
Sure. Yeah. Yeah. So if we take a look at gold with the same type of analysis here and we use Fibonacci extension, we take the low from this overall massive pattern, the high and this low, and we squish that down. It brings us up to about 2650. So somewhere in that range, gold should continue to muscle its way higher. And so both of them have got quite a bit of upside potential. Silver percentage wise is obviously way more, which is why a lot of people get excited about silver. percentage wise, it'll absolutely crush what gold does. But both of them are very bullish. And when we look at the shorter term chart of gold, gold is at resistance just like silver is. So the chart's bullish. I would expect a 1 to 4 week pause or pullback, which is a very good thing. And then I think we see the markets rip higher. Maybe they'll just keep going higher without that pullback here. But if I would mentally be prepared for gold and silver miners to pull back and pause, just because it's nice to be mentally prepared for when it happens. So you're not like, oh no, it's topping. You'll be like, no, it's taking probably a breather, right?
Right. That's a really good point. And I'm actually myself, I'm expecting that. I'm glad you reaffirmed that. It's just that's a very healthy market, if you would, is with pullbacks, if you would.
Yeah.
This leads me to really three questions. So then again, these are what we're expecting, not necessarily what's going to happen, but what we're expecting a pullback. What would be a relatively good entry point or a good settle point, short term or intermediate term, and an intermediate term being between now and let's say, I'll even go a little further out, maybe until June or so.
Yeah, I mean, I really do like them. If I was to kind of pick using Fibonacci retracement, which is the opposite, I used Fibonacci extension before, which extends price up so we can get targets. A Fibonacci retracement tells us where likely pullbacks are going to be. So I just take this recent low from this rally and we go to the high. And so a pullback, this is in gold, a pullback in gold to 2280 all the way down to about 2230. This is kind of that sweet spot. If gold was to just trade sideways and fade back down towards this range, I mean, that'll be a very, very bullish sign. And I mean, I think gold still is a kind of a screaming buy, especially long term. Same with silver.
Sure.
But short term traders, if it was to fade down to 2280, 2290, that's probably a pretty good level to step back in, buy the pullback. It is in an uptrend, so this is kind of buy the dip mentality when something is in a bull market phase. You can buy the pullbacks, and you're not really trying to pick a bottom. You're just trying to get in at a good price, knowing the odds are it's going higher.
Right.
If we take a look at silver, we can do the same thing. And we'll just go forward here. If we look at silver and use this recent low with a Fibonacci retracement, silver could pull back to about 2680 down to 2630. Somewhere in this upper range would be ideal. You don't really want it to pull back too far. I generally like the 38% and the 50% retracement, meaning if this run up is 100% of the move to the upside, then it's going to pull back 38% of that move, maybe halfway, the 50%. And that's usually a sweet spot for it to find a bottom and then start that next leg higher. So yeah, 2650 is probably a pretty good spot for silver, for it to probably pick up speed and take another run higher.
Got it. And this, again, we're gaming this out. Let's assume that we're correct. We get a nice pullback here in the next few weeks, maybe we'll say 2 weeks to maybe, it might even be a little bit longer, it goes sideways here for 6 to 8 weeks. It does work well. And I don't know what you think of the seasonality, but it does work well with the seasonality if we go sideways for a few months going into the fall. Do you know anything about that? Or do you know anything about the seasonality of gold and
I
silver?
don't have the seasonality for gold up here, and I've looked at seasonality charts of gold and I've showed them before, but it's funny because there's a bunch of different companies that do it and they're dramatically different. So for some, I don't know how everybody's doing it. I don't know which one is more accurate or not, but yeah,
Well,
so I'm
from
not
that
sure
report,
seasonality wise because two of them are countering each other. One's doing the opposite. So I'm really kind of confused, but I think gold is in an uptrend, not only long-term monthly chart, like a multi-year trend, but it's short-term. It's also in an uptrend. So the odds are it's probably going to keep wanting to hold its value and then rally and then hold its value for a bit, like a pause and then rally.
sure.
Yeah.
Just a typical even ebb and flow then.
Yeah.
Next question is, do you pay much attention to the silver gold ratio and how does this play into that? Maybe that's also why, well, I know that's why I am more optimistic and more bullish, and I'm very optimistic and bullish on both. Don't get me wrong, but I'm very optimistic and bullish on silver.
I never look at it. It's just one of those ratios I've never used for anything. I mean, yeah, you can look at it and be like, oh, silver is way undervalued or gold's way overvalued, however you want to look at it.
Sure.
I don't use it for my analysis, but obviously, if you've got the right ratio, it's much smarter to get probably into silver if it's way undervalued. And silver's, I mean, can you? It's such a, I mean, it's precious metal, but it's such an industrial metal too. And as we
Right.
keep moving into the tech world, silver's
Yeah.
gonna, eventually it'll be priced like gold because everybody's gonna want it. It'll still be the cheap metal, but
Right. No, I got you. Okay. Well, excellent then. And I think that gives myself and our listeners and readers some good expectations, if not expectations, but just to keep their head and expect a pullback here. I certainly am, and I hope it does, because that just is really an indicator of a healthy market instead of just going parabolic,
yeah, totally.
which seems what we have. Let's talk about my other favorite industry and commodity, and that's energy and oil. Here, we've had quite the move recently in oil. We're also getting into the summer driving season here, coming up here really soon. What are your thoughts on? Yeah, it looks like a breakout right there. Talk to me about oil.
Yeah, so oil definitely has a pretty significant kind of pivot line right through here. Put in a big rounding formation,
Look at
kind of
that.
flag sideways here, trying to eat through this, trying to get through this breakout zone, and then it had a breakout. It's had a nice rally. Now, this is the daily chart. So oil's on a tear. It's on its way higher. There was an early indicator telling us that oil was most likely to break out. And that was when we looked over at the energy stocks, because typically you see the energy stocks or the leverage play around a commodity break first. And of course, when we look, we saw energy stocks break out way earlier, and they've had a huge run to the upside. And gold, I mean, not gold, oil broke out, much more delayed. And this is typically actually what we see, Andy, in the precious metal space. We generally see miners break out, and then gold kind of breaks out, and then silver catches up and rockets higher. But we're not seeing that in the precious metal space. So there's definitely a big disconnect right now in the miners and in the gold space. The I think there's big institutions and countries loading up on physical gold, and it's holding its value. It's kind of changed that a little bit. But anyway, the energy space I still like. Typically we see gold and oil rally really strong near the end of a stock market, a bull market. Usually they rally very strong going into a recession. People get worried, and I believe all these things are happening. And I was listening to somebody talk about, it was a video, and I'm not a fan of all this stuff, but it's talking about how there's this massive war coming. I mean, I know we already always have wars going, but they're saying all this stuff is coming together, and it's going to be this huge war. And of course, war means higher oil, higher gold pricing. I mean, those are like the war commodity plays. So I think we are in that perfect storm in terms of we are in a stock market, near a stock market top. We're near, I think, economic top. We got wars unfolding, and things I think are going to get uglier. And this naturally, just because we're at the end of a stock market economic cycle, this is when energies and gold come to life. So there really is kind of a perfect storm kind of brewing for potentially a very big run here still in gold, silver, and oil, um, based on just all of those things. And they're all in strong uptrends. So you definitely do not want to be betting against them.
Yeah, and I'm glad you said all that, because yeah, it's so true, and it looks like the charts are really not only confirming but leading. But what I find interesting that you showed up, you pulled up the ETF that really exploded up, and it looks like, I don't want to say oil's following, crude's following, and I agree that that is typical. I guess now it's like, okay, I want exposure to oil sector, and I already have exposure to sector. Then it's same question. Then where's a good entry, if you would, if we're looking for a pullback? Because I'm seeing that the energy sector right there, that's a parabolic. There's some, it
Yeah.
really is. So I'm looking for a pullback. What do you expect?
Yeah. I mean, let's just step back. Let's take a quick look at the long-term view of energy stocks. Obviously, we're right up here in these highs that we've seen big selling step in before. There's a lot of mixed signals in the energy space. I mean, we've got this giant pause right here after this massive run up. Technically, we could see energy stocks rocket higher. We could
Oh my
see
God.
oil rocket higher. So there is potential here for still a very big move in the energy space that could catch a lot of people, including kind of me, off guard, just because I don't feel like there's that much space left in the market. But these commodities could really run.
Yeah.
But we're right up here at these major highs. So it's a difficult play simply because, as you mentioned, when we go to the daily chart, it feels it is somewhat parabolic in the short term. And we need some type of pause or pullback, not just a 3-day like sidestepping and it takes off again. Kind of need like that multi-week. I would naturally think if we see gold, silver, and miners have a bit of a pause or pullback, we'll probably see the energy stocks do the same. Typically, the whole ebbs and flow of the market kind of are tied together. So we might see everything take a bit of a pause in that realm. And I mean, I have this, I follow this hot list I call the best asset now. So I've got these sectors sorted by the best assets or sectors or commodities to be in, and down at the bottom are the worst. And at the top, it's interesting because a couple of months ago, all of the ones in the top here were down at the bottom. And all the ones at the top here, they're all commodity based. We got silver, marijuana, copper, gold, Bitcoin, which is an alternate currency,
Right.
energy, natural resources in general. So, I mean, the whole commodity space is coming to life. And to me,
It
this is like
really
a warning
is.
sign.
Yeah. And I'm glad you pulled that out. It really, really is. Um, very, very interesting then. Okay. I guess then my next question is, it looks like, and again, if ideally we would have a flat, I don't want to say flat, but it'd be a range cooling down, if you would, because we had a great breakout. But again, yeah, exactly. But again, we don't really know because, as you mentioned, with everything going on, we could really see it spike up significantly higher. But I guess my question is let's assume, and I'm agreeing with you, you've been pretty negative on the general stock market, the general S&Ps here since for a while. And I would agree, for a lot of different reasons. Where do you see energy, and where do you see the gold stocks, the energy stocks and the gold stocks performing, or do the charts say anything? How would they perform if we do get the broader sell off?
Yeah. So, I've got an infographic that kind of shows the cycle. This is of kind of the stock market. If we were to just look at these two cycles, so this bluey gray cycle is the stock market cycle. Now it will bottom before the economy, which is the yellow, and it'll top out before we go into a recession. That's because investors see things slowing. Typically, near a market top is when we see precious metals, we see energy come to life. We are seeing that. It is clear as day. We also see industrial capital goods do really well. Now, this is like factories and companies expanding. They're buying equipment, new assembly lines, machines, all of that stuff. And that
They
is
always see it at the
because,
top, right?
yeah, we see this at the top, and that's because CEOs are like, we just crushed it. We're killing it, COVID, and
Right,
we've got good sales, and everybody's still in this spending mode. And so they start to expand, not realizing like there's a whole business cycle and they're literally at the peak. And there's actually the ETF for this. If we take a look at the XLI, the industrial, which is all that stuff, look at the rip they've had to the upside, and they look primed and ready for another push. And so factories, and this is what's masking, like, I believe we're the economy's weakening. I think the last of the money is just getting spent by companies and individuals before they run out and realize things are slowing. Everybody's buying and upgrading equipment right now, and the share prices are skyrocketing, and people don't realize like the music's about to stop, and
right,
this, when people get burned, they just spend millions on equipment. And they're like, "Holy crap, our sales just cut in half. We could have been on our old equipment, sitting cash rich, and now we're broke with huge leases," right?
right.
So, I don't remember exactly what your question was, but oh yeah, your question was how do we relate these commodities to the stock market? So, uh, what could happen is we could actually see gold, silver, and miners and energy keep going higher even when the stock market starts to go sideways and starts to sell off. We actually saw this in 2008. The stock market actually started going down for a couple of months. Gold, silver, and miners kept going up for a couple of months, completely bucking the trend. And when we see that, that to me is going to be like, okay, we are like weeks or a month or two away from, a major kind of meltdown in the stock market. It'll be a big red flag. So I do believe we still have a couple of months of higher gold, silver, energy pricing, even if the stock market's top out and start to sell off. And the stock market is getting overall pretty tired. The energy or the tech space is running out of steam. The Nasdaq actually gave us an exit signal last week. The SP 500 is hanging in there, but it is hanging onto a thread where the layers in the stock market, if you were to peel back just the price, there's a lot of money shifting out of the markets into defensive plays. The market here we might have that one more push and rally into May or a little bit further, but we are on the cusp of I think, exhaustion in this market. And if the market starts to go sideways or lower and precious metals and energy keep going a bit higher, that's like a huge red flag, especially for long-term investors, right? If you're in the buy and hold, you probably don't want to be holding, over the next year because we could be in a huge correction. It might take 3-5 years or longer to recover. So yeah, we're
Yeah.
at a big turning point.
Yeah, it's interesting too. And it makes sense too, because if like oil continues to rise, and let's assume that were to happen, that's really negative for the economy, right?
It is, yeah, for sure.
So that would make sense. And then also for gold to keep on going, that would be also, as you said, a defensive move of investors rotating into a more defensive posture.
Yeah.
Any parting thoughts you got here? Yeah, over the next, what to look out for over the next few to several weeks?
Yeah, I think people need to be just expecting volatility. I'm expecting energies and precious metals to have some type of pullback and pause. Don't panic. It's healthy. We need it, or else if price keeps going up, it's going to come straight back down. It's like damaging the parabolic move, as you mentioned. I'm focusing on the precious metal space and in energy space right now. I run one of my newsletters is the Gold and Oil Guy. This is what I focused on, back in 2008 till now. And so we're taking big moves. We got some big moves going on in the mining space and the metal space and energy, simply because this is the time for these to shine. And yeah, it's exciting. So I think people just need to be prepared for some volatility. And I think we're still in buy the dip mentality for metals, miners, and energy stocks.
Okay, excellent. Yeah, Chris, if people want to become more familiar with your work, how do they reach out to you and how do they see your work?
Yeah, they can go to thegoldanoilguy.com. And that's where I share the analysis like what you and I are doing and the trades based around it on ETFs. Or they can go to thetechnicaltraders.com. And that's my longer term investing strategy, focusing on managing larger pockets of money that you want to protect and grow in all market conditions.
Excellent. And I'll put all of this in the show notes as well. Chris, thank you so much. I love your analysis as always. And we'll have you on again here really soon if we see some changes here coming in.
Sounds great, Andy. Always a pleasure.
Yep, thank you.